What's up, everyone? Welcome back to Money Talks. I'm your host, Jack, as always. Recently, the Bank Negara Malaysia has announced a 1% increase in interest rate. And you keep hearing people say that the economy is going down because of the war in Middle East, the inflation is rising everywhere, and ringgit is very volatile. What's really happening here? In today's episode, we are lucky to have four experts from finance sectors to tell us what's really happening and how would it affect us. First, let's welcome Dr. Giselle from UM.
So, hi everyone, I'm Dr. Giselle, a finance lecturer from University Malaya.
So, Miss Giselle, let's start with something we have all been feeling. Prices going up. How exactly do interest rate control the inflation?
Basically, when the Bank Negara Malaysia increases OPR, which is the overnight policy rate, borrowing becomes expensive and returns on saving becomes more attractive. So, people are less likely to take out new loans and they tend to reduce their spending.
So, it decreases the aggregate demand.
Yes, exactly. So when people reduce their spending, the overall demand in the economy drops. When the demand drops, prices don't rise up as quickly, so the inflation slows down.
I see. And we can actually see from the data when OPR increased from 2022 to 2023, the inflation gradually came down.
Yeah, but there is usually a lag for BNM's policy. It usually takes about 1 year for the effect.
I see. What about GDP? How interest rate affects GDP?
So when the interest rate increase, it slows down the economic growth, meaning the GDP reduces. This is because household they tend to save more instead of spending, and for businesses, the cost of borrowing become expensive, so they delay expansion or take on new projects.
So everything slows down basically.
Yeah, but there's also another effect. So when the interest rate increase, it can strengthen Malaysian ringgit, and this can reduces the net export and further influence GDP.
I see. So tell me what actually happened to jobs when interest rate go up?
Usually, the unemployment rate increases. This is because when interest rate increase, the cost of borrowing for businesses becomes higher, and they try to reduce their costs.
So they hire less.
Yeah, so the businesses they delay hiring, they reduce production, and they even lay off workers. And since people are spending less, businesses don't need as much workers.
I see. There's a kind of chain reaction going on here.
Yeah, so lower demand leads to lower production, and it leads to lower job opportunities.
Right, thank you for your professional explanation. And next, we have Miss Joyce, a portfolio manager who has more than 6 years of experience working for firms such as Pavilion. So, Joyce, when BNM increased the interest rate, it actually shifts capital flows between different financial markets. Can you tell me what's really happening there?
Thank you. What's really happening is that investors may reallocate their funds and capital based on risks and return. When interest rates rise, this creates a ripple effect where causing shifts of capital and funds transfer between financial markets such as the primary market, money market, and even the foreign exchange or forex market.
Let's start with the money market. So, what changes there?
For the money market, higher interest rates means a higher return on short-term instruments such as treasury bills, as they are usually less risky and more liquid. This may cause a capital inflow into this market. As a result, investors may prefer to invest more capital into such holdings as compared to long-term, more riskier instruments such as bonds or stocks.
I see. What about stock market?
Yes, the stock market, a hot topic of interest. For the stock market, there might be a capital outflow, as higher interest rates means higher expenses and consequently lower profitability for companies and businesses. This may cause investors to shift more capital out of this market, as it is less attractive compared to more short-term instruments such as the previously mentioned treasury bills and so on.
Thank you. And I see then the bond market, I think there is quite of a reaction there, right?
Yes, the bond market is particularly sensitive towards shifts in the interest rate. This is because bond prices and the interest rate have an inverse relationship, meaning that bond prices fall as interest rates rise.
And finally, how does this affect Malaysia's currency?
This may usually cause a capital inflow into the Malaysian foreign exchange market. This is because higher interest rates means that Malaysian currency is worth more and of greater value within foreign markets, as Malaysian ringgit-based assets have a higher appreciation rate compared to other countries' assets. So more investors may pour more capital into this market.
Thank you for your insightful sharing. So let's move to the next expert today. Next, we have Miss Yvonne, a bond investor who have more than 10 years of experience. Let's start with the simple questions that everyone's been asking. Why do bond prices fall when interest rate rise?
Okay, so for my opinions, bond price falls because of competitions between new and old bonds. So for when interest rates increase, new bonds are issued with a higher returns. Like this will make existing bonds with lower fixed interest rates less attractive. So as a result, investors are only willing to buy those older bonds with a lower price, which makes their market value in a drop.
So Yvonne, is there a difference between short-term bonds and long-term bonds?
Yes, they are react differently because of something called durations. Short-term bonds are less affected since investors can get their money back quickly and they can reinvest at a higher rates. So for long-term bonds, they are much more sensitive. Their cash flows are spread over a longer period. So when interest rates rise, their present values drop more significantly. And so that's why investors are usually prefer short-term bonds during the periods of rising interest rates to reduce their risk.
What a wonderful explanation. Thank you. And finally, we have tech startup Yibing. So, Miss Yibing, we have talked about theory, but I'm more curious about how interest rate change affects everyday people like us and businesses like you in real life.
So the impact may be direct. So when the interest rates increase, the borrowing will become more expensive, causing the household need to pay more for the loans such as mortgages and the car loans. So as the cost of living increase, the individual tend to reduce spending or not essential spending and also will increase their saving.
So, can we see a real life example in Malaysia recently?
Yeah, sure. So for the 2022 to 2023, the Bank Negara Malaysia has increased the overnight policy rate OPR from 1.75% to 3%. Right. So as the result, the bank has raised the lending rate. So which means the mortgages will become more expensive. With the higher borrowing costs, making many firms will become more cautious for their investment decisions. For example, the property developer may restructure or delay their project due to reducing demand from the buyer from facing the higher mortgages risk. And at the same time, the household found it difficult to afford a house because of the increasing in monthly repayments. So overall, both consumer and also the firm may adopt more in the conservative financial behaviors.
So, in the end, this policy decision actually shapes how people spend, how business invest, and even the overall direction of the economy.
Yeah, exactly. The Bank Negara policy is in the earth. Exactly. Policy by the Bank Negara Malaysia is maybe we'll see the distance from our daily life, but it actually have a significant impact on our economies. They influence the investments, borrowing costs, and spending decisions. So it is influence the overall economic growth, and that is the reason why the monetary policy become important in managing the economy.
It's a pleasure to talk to you. Thanks for your sharing. And hopefully today's discussion gave you a clearer picture of how interest rate works and how they actually affects the real world. I'm your host Jack. Thanks for listening and we'll see you in the next episode. Until next time, goodbye.
So since long-term bonds, there are spreads in the rates from Qatar.
For short-term, lower risk holdings such as treasury bills. As a result, 可以重来这个，
从 as a result
重来要蛮。
Here we go again.
Finally, we have YB, a tech startup. So, Miss YB, we have talked about.
"12 seconds later.
When the interest rates increase, the borrowing will become.
这是什么？晋阳啊，晋阳！
你的问题，
把
各位啊。
First, let's welcome Dr. Giselle from UM.
So, hi everyone, I'm Giselle. 讲这个。
他人2/3散2/3，
怎么关掉？
太虚了。所以这个要 stop 啊？
好的，等你重新开。
啊，你坐下来。然后你这个。
Alright, thank you for your professional explanation. Yes.